It occurs to me that your approach to due diligence and almost building portfolio for investors is similar to how I would advise clients to build an emerging manager portfolio. It's almost identical, right? These might have shorter track records, or they might have just a back test. We're only going to put min bets on 4 or 5, maybe maximum 10 to 12 of these managers on the expectation that 1 or 2 of them will be outperformers. But are we investing? Are we looking at managers who are emerging, or are these managers coming with longer track records? Because it's a big pool. So even if you filter down from 10,000 managers and you remove all of the 50 strategies, you're still talking about thousands of managers, right? Are we picking the emerging managers in China, or are we picking established managers using an emerging manager approach?
Both. There's managers, there's a fixed income manager. And again, I'm not using names, but please reach out to me if you somehow watch this and want to learn more about the strategy. They manage approximately $26 billion. So I wouldn't call them emerging. They have a 6+ year track record. They're a big fixed income manager in China. I did do an on-site. Very impressed. They're not an emerging manager. There's another manager that, again, did an on-site in Shenzhen, has a less than a 1-year track record, high frequency quant trader, so to speak, unbelievable pedigree. And he managed very significant size offshore in the United States. Same methodology, trading equities and hedging in the United States, approximately $10 billion US. Now he's taking his expertise, knowledge, and porting that to a different geography. Emerging manager, yes, less than a 1-year track record. I think because of his pedigree and the fact that he's had some success in a different geography, you should look at him, a trader like that, under a different light than just somebody that has a 1-year track record, new to China, that may be managing $10 million. You got to dig deeper. That's why this due diligence really matters. And it's not just me doing the due diligence. It's talking to people like you. It's talking to my consultants. It's talking to my prime broker. It's talking to people like William Ma.
To your point earlier, Matt, sorry to interrupt. I think if you can find someone with a $10 billion track record coming from pedigree, even with 1 year, if we took that same type of profile and was looking at a manager in the US, that would be a manager that would hit capacity very quickly. If they spun out from like an SAC, or they spun out from like a World Quant or Quant Edge, or right. And someone came to me and said, I was running 10 to 15 yards with a 10-year track record. I only got 1 year live on my first fund coming out, but we'd be piling a lot of capital on someone like that. So I would imagine if we could find someone like that in China, that's a form of allocation edge. And number 2 is, it feels like some of these strategies might also be capacity constraint because of that. So to an earlier point that you made, I just want to add or ask a second question. Are these managers capacity constraint in the type of strategies that they have, and that's why they have such high Sharpe and high Sortinos? Or are they scalable? And for allocators who are bringing capital onshore, do they want more scalable strategies, or are we only working with capacity constraint ones, and maybe the pros and cons there?
Yeah, so let me touch on the quant that had a lot of success in the United States that was trying to replicate that in China. So he has a 4 Sharpe live realized, which is insane. And your point about capacity, 12 to 18 months, my opinion, he's at capacity. What that capacity is remains to be seen. I asked him, it's probably $700 million, might be $1 billion. US dollars. He'll get there, no doubt in my mind. Hopefully some of my investor capital is there before he does reach capacity. My experience dealing with CTAs, as I said, my team has helped bring 10 CTAs to market. The 2 that have had the most success are a medium-term trend follower. His average trade duration is about 22 days, trades 40 plus markets in the mainland, and will trade as many QFI markets as we can. Start with whatever's available. Hopefully that product list will grow. I think his capacity is $1 billion US. So he's nowhere near capacity. I think he's got a couple-year runway. The other CTA that has been live through RCM China and our WFI for about 3 years is an AI and machine learning CTA. His average trade duration is about a day and a half, clearly lower capacity, trades about 30 markets. Mainland will trade all available products via QFI. I think his capacity is probably, I don't know, $400 million, $500 million, not even close. It depends on the strategy. Obviously, higher frequency strategy, it's going to have lower capacity. 5, 6, 7, 8 sharp, which I'd love to meet every one of them, they're going to have a lower capacity. What I think is unique about the offering and the collaboration between RCM China and OP, which if we want to talk about for a moment, is our process, your team's institutional pedigree, my team's institutional pedigree. And typically when an investor looks to go to China, you would think that you're paying 2 and 20, and then you get a group like OPIM or RCM China involved. There's fees on top of that. It's fees on top of fees. Because our relationships and because the belief that the managers want this offshore capital, they don't have access right now. They know how to make money in country, but they don't have the pipes, the distribution, the infrastructure, the know-how, the bandwidth to educate the investor, put a wrapper, check all the boxes institutionally. We've been able, which this is really good news, to negotiate fees down with these managers where to access China Alpha at 1.5 and 25, I think is a great deal for institutional global investors. So I'm really excited about what the next couple quarters, what comes of it. I know I spent some time with you and Aaron in Singapore at SALT. This message, this business, it seemed to resonate unless they were just your friends and they were being nice. I think they like what they heard. And I'm excited about myself and Chris will be in the Bahamas at Apex. You're making a trip across the pond to Miami at iConnections. Over the course of, I don't know, call it 60 days, we're going to get feedback from 50, 60, 70 different investors. And I think we're onto something. I really do.
No, I think you're right. A couple of takeaways, and just for the audience, we were in Singapore for the iConnections event just about 3 weeks ago, I think it was. And so it was not just a meet and greet, it was a pretty good conference where allocators came from all over the region to meet with Asian managers, and it's like a newer version or a light version of what happens in Miami. For those of you who know the iConnections event, it's pretty hectic. I'll be there. Matt will be there. We'll be there in January. I believe it's January 29th through to the 31st. And it's going to be hectic. It's like 1,000 allocators and 700 managers or something like that. But they had a light version in Singapore. And I think what was interesting, the takeaway in terms of the feedback on China and QFI was that number one is it really is different. It's arguably alpha, people are still debating about it, but certainly not tapped exposure yet because offshore investors really can't access it yet, but now they can. The second is that 1 out of 5 of the Asian allocators that we talked to had already started increasing their long exposure to China. We're starting from a low base for a lot of them, of course, but the smart money seems to be adding on and recognizing that we've hit the bottom. So now that we have macro numbers improving, just last week, China injected a record amount of capital liquidity into the market. Rates are coming down. Exports are still a little bit weak, but the domestic demand is still there. And the commodities market, albeit it's been flat this year, so long as there's volatility coming up, alpha generators and managers are going to do really well. So that story seems to resonate very well with the Asian allocators. What I'm curious to see is whether or not the offshore allocators will follow suit, or whether they'll need to see big FOMO candles come up in some of the managers they've been monitoring before they put that first subscription in it, right? We were just talking last week, there was a long manager that you and I both know. I'm not going to mention names, but they're up 36% this year. And this is a long-only equities manager, right? So the whole overhang of risk real estate, etc. It seems to be obfuscating some really good opportunities here, some of which is CTA and CB that you mentioned.
Yeah, no, I'm excited. I've been in the space for 22 years, but just in China for 5, and it's reinvigorated me. I used to have short hair, and I said, well, I would cut my hair when our mainland business got to $1 billion, which it did for a moment, but I didn't cut my hair, and I might grow it until this QFI offering gets to $1 billion, because I really think there's so much potential. I'm never going to do pigtails or braids or anything like that, but it's really
it's a mullet. It's definitely a mullet. Yeah. You're looking a bit Gretzky there with that mullet.
I have to see my wife's family, like my in-laws, for Christmas, and then I'm going to Tampa to see them. I'm looking forward to it. And then we're going up to Boston to see my family. So I have a haircut scheduled for, I think, tomorrow or Friday. My wife set up an appointment. I need to get a trim at least. Maybe if we can touch on, Alvin, just because I think this is a differentiator. I keep saying how we do things unconventional and different. Doesn't mean it's right, but different. The data room that your team is setting up, I think, is very big, like value add, to be able to put tier sheets, marketing decks, a DDQ, dailies, interviews like this with the alpha providers. I think it's going to be very instrumental in educating the investors so they can make an informed decision. They may not like all the strategies or traders, but at least they can get that and make an informed decision. I think that's a big deal.
Yes, I think going back to first principles of when we looked at, and you and I were talking about this in Singapore, is what are the translation points for offshore allocators, right? So you have offshore allocators who are used to having a very deep transparency, easy access to information, especially from emerging managers who are starting out with a short track record. So we're like, okay, they're going to be asking for similar things from emerging markets, although these are very established managers. Some of them have 10, 15 years of track record, but they've never put a data room together before. They do have some form of data. They do have DDQs now, but it's still not in a vernacular that translate well into the metrics that offshore allocators are looking for. What we built is like a platform that provides this information that's not only translated from Chinese to English, but more importantly, from how they look at risk to how allocators look at risk, how they look at operational due diligence, segregation of functions, corporate governance, in a fashion that offshore allocators would understand. So I think this is first principles what we're trying to get at and trying to bridge that gap. It's not just a translation of Chinese to English. It's a translation of language of risk, language of trading. That seems to be resonating with some of the allocators. I wonder though, is as we start to filter this through, how this new set of, or this new group and this new demographic of alpha generators are going to compare to, say, the same names that they see in their private banking list, the same big bulge bracket names that they see. And I'm not going to name names, but it seems to be the same 5 Chinese asset managers that are on everybody's monitor list, but nobody looks at the 5,000 to 10,000 managers that are actually available onshore. So hopefully we can show them something different.
Yeah, and I don't know what the statistics are. They definitely exist. So I'm like, don't quote me on this, but something along the lines that the first 3 years of a manager's life or before they get to $25 million, more often than not, those are the alpha providers. Like you generally see the outperformance. Now, there are a number of those managers that never scale. There are a number of those managers that blow up. So I'm not saying blindly allocate to every emerging manager, but you can find a diamond in the rough and get preferential fees and put up 10, 15, 20, 30% at a decent volatility level versus a lot of these large managers are sitting back and getting their management fee, getting their incentive fee, or maybe they've gotten so big they can't trade urea or.
I think they say once they hit a certain size, they become asset aggregators or asset acquirers rather than alpha generators.
Yeah. The biggest CTAs, and there's some exceptions, I don't mean to stereotype, the large CTAs, it's like the Titanic. They're trading fixed income. They're trading FX. They're trading stock indices. They're not trading in the US lean hogs, orange juice, sugar. Some of these esoteric markets, the trading limits may be 4,000 contracts in the front month, a $5 billion manager is not trading that market. So if we can somehow find those diamonds in the rough before they become the next Winton, AQR, Ford, one day was a great company. They were massive. So groups like that.
Maybe there's a question I should have asked earlier, and we can patch it into the video earlier, but it has to do with trading asset classes like juju berries and apple juice and orange juice. These are fascinating markets to be trading in. But it also heard is that the movements and the reason why systematic trading works in China is because of almost retail-like patterns that we see in the market. Is this true? Because these are also commodities markets that are primarily traded by corporates and larger institutions in China. So why is it that these patterns and the market dynamics are so retail in nature?
In the Chinese commodities market, it's predominantly retail. Depending who you ask or your source, there's different statistics.
So it actually is retail.
Yeah, I'm hearing 80, 90% of the flow in commodities in China is retail. And certainly the trends last longer. And it's evident. It's not my opinion. And I keep falling back to markets that don't trade anywhere else and just looking at a snippet from Bloomberg, like some of the best performing markets. I think this is over the last 6 months, it might be year to date, but these markets are up 30, 40, 50, 60%. Markets like coking coal, I don't think it trades anywhere else. Glass futures, ferrosilicon, I have no idea what that is. Jujube, coke, soda ash. These are markets that you cannot get access to unless you trade China. So take a sip. Again, that access, whether the path forward is internationalized markets, WFI, QFI, swap, every path dependent on your situation, but still to be able to get access to markets that don't trade anywhere else, traders and investors really need to explore China to see what makes sense because it's there to stay. I think it's the second largest economy in the globe. Definitely within my lifetime, probably within the next couple of years, will be the largest economy in the world. Take advantage of it.
Yeah, I couldn't agree more. So look, let me wrap it up here. Thank you so much, Matt. It's been a real pleasure sitting and riffing with you. We should do it more often, actually. And I will see you and anyone else who's interested, just in case you're wondering, we will be in Miami for the iConnections event. Again, that's, I think, January 28th, 29th through the 31st. It's a short trip, but it'll be pretty intense. If you see us, come by, say hello. And let's talk a little bit more about how we can access the market.
Yeah, look forward to it. I'm getting my frequent flyer miles. I'll be in Bahamas at Apex a week before that, and then iConnections there. So I'm looking forward to see you and Aaron again.
Awesome.
All right, take care. Thank you.